What would you say are the main differences of what a company like yours has to offer in terms of SME financing from the more typical bank loans? What sets you apart?
Yeah, so Credit Shelf is a direct lending platform. We offer unsecured loans to SME companies in Germany, i.e. the German Mittelstand. I think it's mainly 3 points that would set us apart from classical traditional bank funding. And that is number one, availability, in a sense that we offer a product which is typically not available via banks, which is unsecured credit. Banks would typically offer fully secured loans, whereas they tend to shy away from lending on an unsecured basis because it's too costly for them to underpin with equity. And then point number two is obviously in terms of risk appetite. So I think institutional investors that are backing our platform, they look for risk reward, and that means we can lend in certain situations where banks can't. And the third point is about execution. It's efficiency, speed of the process. We use technology, to facilitate the loan process front to back, which means we can revert to clients within 24 hours to 48 hours to give them a price and a quote on their loan requests. And obviously, the entire process from loan application to payout is facilitated through a fully automated process. So that sets us apart from classical traditional bank funding.
Thanks. And the next question is, what is your view on alternative SME financing? Do you think this area still has a lot of room for growth over the next few years?
Oh, certainly so. If you look at what we've seen over the past couple of years is a tremendous growth of this area. I think when you look at for example, the UK, more than 15% of the total loans to SMEs are currently facilitated via online channels. And I think Europe, continental Europe, is not yet at that level, but is growing fast. The market is growing, almost 100% per year. And that's something that we have been seeing consistently, over the past years. And I think studies do actually anticipate that the market will be a double digit in terms of market share within the next couple of years. Now, obviously, what we've seen through the pandemic as part of the wider crisis that has hit the economy at the moment is that, of course, there's lots of credit demand, which is flushing into the systems. And, in the German market, some of that is currently absorbed by government funding schemes, including KfW, where banks, for the past couple of months haven't shown the risk appetite to respond to this, big wave in loan requests. I would actually anticipate that there's a big refinancing opportunity, for alternative finance players in the next couple of years. Because simply speaking, when you look at what's happening, from a balance sheet perspective with lots of the SMEs, looking a little bit ahead, is what you will actually see is you'll see lower revenues in the 2020 P&L and balance sheet, and you'll have higher leverage. And that'll put a lot of question marks on, traditional bank funding capacity, to take over, from KfW in this sense. And I think that'll be a moment where lending platforms, alternative lenders, can step in and provide a helpful tool and solution, to the situation. Looking forward to that.
So that's it. Thank you, Daniel Bartsch.
Well,